Good morning, everybody. Thank you for being here. We're going to give a few minutes just to let everybody file in. While we wait, please introduce yourself. Say hello. Let us know where you're tuning in from. Love to see who all's here. Had a bunch of you guys sign up. What's up, Aliko? Good morning, Brent. How are you, buddy?
Doing great. How you doing?
I'm doing good too. It's great to get to chat with you today on OPEX Day, no less. Big day for the options market, I believe.
Indeed, it's by some measures the largest options expiration we've had. So that seems to be a rolling theme that everyone is the biggest one, but that's what's been happening.
And that's just simply because of the popularity of options, generally speaking, right?
Yeah, options growth is just it's really exploding. It's something else, and so that builds up the size of positions, and in theory, the size of options hedging flows associated with that, and that's how we move the markets in from the option space. That's how options flow moves equities, and you see it on full display today, I believe, and into Monday.
Yeah, cool. Well, we're going to get into that shortly. I want to say hello to some folks who are tuning in. We got people from all over the world here. We got Douglas Miller's in the house, Aliko from Toronto, Canada. We got Tufik from France, I think. What's up, Bruce? Bruce from NOLA.
I
Robbie from...
recognize Yuri's name up there.
All
It's
right.
Greenwich, Connecticut, so he's local to me.
What's up, Yuri? Our good friend Ryan Waugh from Calgary, Canada, representing. What's up, Nicholas? We got a handful of the TrendSpider team here in the house today as well. So good to see all of you guys. Who else we got? Atul from Brazil, Lori from Ottawa, Ramin from Philly, Sean from Maryland, Steve from Chicago, George from Hamburg, Charles from Edmonton. Bringing out the whole world here today. Faisal from London, Thian from Malaysia. Nice. If you guys have questions, what's up, Matthew? What's up, David? If you guys have questions, just a little heads up. If you have questions that are kind of like basic, maybe TrendSpider basic questions, feel free to ask them in the chat. There are a couple of TrendSpider employees. Some of my colleagues are in the chat right now. We've got Brad and we've got James as well. They can answer any basic questions that you guys have. If you have questions that are specific, you want myself or Brent to answer, by all means, post them in the question and answer chat, and we will take some time at the end and go through those. So what do we think? We got 150 people here. Everybody ready to rock? Brent, you ready to rock?
Yeah, let's go.
All right, so you guys, this is so cool. I'm so excited because today we're joined by Mr. Brent Kochuba. Brent, for those of you who don't know, Brent is the founder of SpotGamma. And as many of you likely know, because you're here today, we just integrated SpotGamma Levels into TrendSpider. So Brent is with us this morning to kind of teach us everything that we need to know to get the most out of SpotGamma's insanely powerful tools. So what is SpotGamma all about? How do they build their levels? How do their levels work? Why is the options market so important? You know, all that stuff we're going to get answered today from Brent. So I'm going to stop sharing my screen so that Brent can take over here. I'm going to allow Brent to grab the mic, grab the screen share, and he's going to walk us through kind of the basics that we need to know about SpotGamma, about all of the levels that they provide that you're going to be able to see with this indicator. And then once he's done, I'm going to talk through a bit of the functionality that we're going to offer on TrendSpider with these levels. So Brent, take it away, my friend. This is all of you.
Awesome. Thank you very much. Can you see my screen okay? 10-4, we're good?
Yeah, we can see it.
All right. So we are extremely excited, obviously, to add in this integration. As you can see here, we have the TrendSpider integration instructions sitting right here. I know Jason's going to cover that in a little bit, but let's just talk quickly about SpotGamma. So today is a huge options expiration. It's a quarterly expiration. The third Friday kind of the quarter is generally we have the biggest expirations. And by some measures, it's the biggest options expiration that we've had. And what happens is the options market keeps growing. The volumes keep growing, not only in the equity space, but obviously in the future space, the ES E-mini futures options are trading with increased volumes, and these volumes keep compounding. Anyone who, I don't know if you've heard of the stock NVIDIA before, but it is moving a lot. It is now the largest in terms of volume, as well as we have another measurement, which we call delta. So if you want to call that market maker hedging pressure. It's now the largest stock in the U.S. options market. So it's bigger than the spiders. It's bigger in some cases than the SPX. It's gone off. It's just gone crazy. And so these hedging flows are moving all of these instruments. And so we here at SpotGamma seek to translate all of that data, that options data, into key futures levels, or if you trade spiders or the Qs. So we're focused on that index space. So that helps the futures traders, the spider traders, as well as single stock traders understand how the options market is impacting the underlying. And so there's two ideas here. We're going to talk about these. First is support and resistance levels. We outline those key support and resistance levels on our homepage, which is what you're looking at here. So you can get a rough idea, certainly not as nice as the TrendSpider charts, but you can see here where our key levels are. We're going to talk about these momentarily. So you have support resistance. And then the second thing you're going to find, and I can show you this in our founder's note, and I write this every single morning. I've done so since January 2020, never missed a day. I tell a joke that's not really a joke, that I had to write a note from the delivery room for my second daughter. My wife wasn't happy about that, but that's what happened.
I bet she wasn't.
So here are the support and resistance lines you see every day. And then we also have this thing called the 1-day range, which is really important. The 1-day range is a volatility estimate for the day. So if you strike this at the market open and you go down 54 bips and up 54 bips, that's how much we think the market is going to move today. And so for those of you who are swing traders or scalpers, you know, hey, am I playing for a small move today, or am I looking to hit a home run, right? Like a 2% move. Well, this implied move helps you. It changes every single day, and it helps you to gauge how much volatility there could be. And so what you can see here is we pack this with a whole bunch of different information outlining the markets. So back to all of this key data and levels. I don't want to overwhelm everybody, but part of our bundle package here is you're going to get access to all of these daily levels, as well as the things that we offer here on the index page, which gives you a breakdown of all the different information you could possibly want to see about options, key information and levels, expiration charts, et cetera, et cetera. I don't want to go too much into the weeds on this, but that is what you're getting here with the SpotGamma side of the platform. Now, I will tell you that if you think some of this is a little bit too much to bite off, there are a lot of traders, and I would say about a third of our user base only trades futures. Maybe they trade spiders, but they're just trading the levels, right? So they may not even log into the platform. I love it when they do, but they simply pull up, their TrendSpider platform. They have the levels now loaded in, and that's what they want to trade, right? Because they just want to know how the options market could be impacting the future that they trade, be it NASDAQ, S&P, or even the Russell. So that at a high level overview is the platform. I know I glossed through that pretty quickly, but we're just getting kicked off here and have a couple of other things to talk about as we go. Jason, anything else in the overview that I should cover here? I know it was very quick and dirty here, but we're live in the markets, and so I know people want to get to the meat of how things are trading right now.
Yeah, I mean, I think for a deeper dive into this, folks just gotta sign up and get the bundle or get an account with you guys. If they're already a TrendSpider user, we are offering a deal on that. Let's jump into kind of some of the specific levels that you guys highlight every day. Maybe show us some examples of what's been going on this week, whatever you've been kind of keeping an eye on, and kind of talk us through like what we need to know about these key index levels that you guys give us every day.
Yeah, and so I think the best thing that I can do is talk about what I see as a setup into this past couple of days, and then what's happening today with this big options expiration. I see Daniel Lee here asked, are the founders notes sent daily? So we actually offer you 2 daily founders notes. There's one that comes out in the morning. You can see here, it's roughly 7 in the morning. You'll get that. I write that one directly. And then in the PM, we offer a daily recap. So we have a whole bunch of different, metrics and graphs and things like that. So you're getting 2 daily notes. And then the deal here with the way that the market is working, and I want to show you this one chart here. If we click on this sentiment tab, what we find is options expirations, which is typically the 3rd Friday of the month, they have really big positions obviously expiring. And so the idea is that as options positions build up, the hedging flows associated with those positions build up as well. So the closer we get to expiration, some of you may have heard of these buzzwords like gamma and charm, those flows increase and their grip on the market increase, or their impact on the market increases as we get into expiration. And so what you're seeing here is every single expiration, you're seeing the size of call values in orange and the size of put values in blue. And so what you can see here is we're roughly 9-to-1 call values to put values right now. And so you can see that this expiration is way bigger than any other expiration on the board. This is the July monthly expiration. The December expiration is always big, but you can see this is a massive expiration. Again, by most measures, the largest expiration we've had. And the reason that this is so big is because the stock market obviously has rallied a lot over the past month and even the past quarter and year, right? And so, you have these stocks that go up, and that increases the value of calls, and it also increases the amount of calls that are trading, right? Everybody in here knows when something starts to rally, everybody likes to pile into that rally, and it makes the momentum of the stock market go up faster. And so, you get all of that volatility and the position sizing building into today, and then suddenly what's going to happen today at around 4 o'clock, all of these positions expire, right? And there's a whole bunch of settlement that's involved with that. But the key is that if you think about the size of this order flow here, and if you show us on your screen, there are all these, in theory, long shares of stock that market makers own against these call positions, right? Because how does it work? Well, if Jason wants to buy calls and I'm the market maker, I sell him those calls, I have to buy shares of stock to hedge myself. And the higher the stock goes, the more stock I have to buy. Well, what happens at expiration? All of these positions are gone. So if Brent sat here and bought, 10,000 shares of NVIDIA to hedge myself, suddenly when these positions all go away, right, I don't need these shares of stock anymore, and I got to unwind that position. So that's just a rough idea of why options in expiration can be so impactful. Now, inside of that, there's a lot of nuance, right? How is this impacting the markets directionally? Which way can we lean, et cetera? One of the things that we find is that 68% of the time, the stock market, the S&P switches direction from the week into options expiration to the week after. So what does that mean? Well, we rallied for the most part this week, which indicates that next week, we're probably going to have a little bit of a down market, a market correction, or a little bit of contraction, right? Just off of this OPEX positioning. And that's important because if you know that, like on Monday, if we're weak, right? Today we're a little bit weak and people are going, it's macro concerns, like CNBC, they need a reason, right? They need a narrative. And if you know that the reason is likely options expiration because you can time it and you can see these positions shifting and adjusting, then you can feel more comfortable about buying a dip or interacting with the market, right? Because you know that macro narrative that someone's trying to wheel out is probably not accurate because there's this huge options expiration. So that's the rub of what we're looking at here. And the way that we look at key levels, if I just zoom out, obviously you can just load up your TrendSpider now and get your key levels. But we break them down for you on our website. As you can see here, we have these implied moves and a bunch of different named levels. And I don't want to overwhelm everybody here. So what I want to do is I just want to show this index page. And what I can do is I can kind of zoom in on these charts or just blow this up, and you can see the options positioning at each strike, right? So what we get here is all of the major levels, and there's a couple of big positions down here, but you can see here, right, this is a giant strike, and the bigger that the strike is on your screen, the more gamma there is at that given strike. And the more gamma there is at that given strike basically tells you the more hedging flows are tied to that strike. So we end up getting these big ranges, as you can see here, that inform us as to where hedging levels will come in and out of the market. Now, what we do at SpotGamma, we don't make you look at that chart. What we do is we say, hey, we have 6-7 years of data on these gamma positions. And so what we do is we come in here and we say, these are the big levels that you need to pay attention to based on the size of the options flows at these strikes. So you can see most famously, we actually coined this term called the call wall. And you'll see this kind of kicked around a lot now on Twitter if you're on, or X or whatever you want to call it. But interestingly, the call wall is a resistance level. And our stats show that what happens is the market tends to rip into that strike. And then when it hits that level, the market tends to go flat or trend lower. So those stats are helpful if you're a trader there. So yesterday what happened? We hit the call wall and we traded immediately right down, right? We rejected right off of that. Then you also notice here a couple of other interesting levels, large gamma levels. Those are, again, strikes that had big gamma positions. Their support and resistance levels related to that. And then what combos do is, if you are looking at only the SPX index options positions, you're missing all of the activity that's taking place in the spiders. Or if you're watching the NASDAQ, the NDX index, you got to pay attention to the huge position there in the Qs. So the combo strikes, what they do is they merge the gamma positions at the SPX and the SPY, and then we back out what the equivalent level is. So that's why you see some of these occur at odd prices, right? Because we're incorporating the size of the level, like 55.22. There's a whole bunch of positions at SPY 550 that we're incorporating, and so that's what you're seeing. So this gives you, again, the key support and resistance levels across these major indices, and then you can combine that with our one-day move to get a full picture. And so, Jason, if you want to bring up your screen, maybe we can show exactly how we translate these levels and how the market interacts with them, so people can get a better handle on all of what I just said.
Yeah, absolutely. Let me do that right now. All right, so you should be able to see me here.
Yeah. And so if you are a current SpotGamma subscriber, the levels are going into TrendSpider. So if you have access to TrendSpider, then you're good to go. There's nothing else you have to do.
Yeah, you want to talk through that really quick?
Just there was a quick question on there, so maybe we cover the levels and we can cover exactly how it works. As one of the things I just wanted to mention here is that I understand a lot of what I just covered is fairly complex in terms of gamma hedging and all these kinds of things. We do 4 Q&As a week. I do 2 of them myself. We just added a guy named Imran. Many of you already know him. That we do trade Q&A. We also have a Discord channel, so we're out there helping people understand all of these flows. We don't kind of just throw you in the deep end and walk away. So I just wanted to mention that.
Yeah, Imran's great. I love listening to him. He's got a really cool perspective on things.
And he's got that suave British accent.
He's got that too. Okay, so we've got the levels loaded up here. Talk us through the basics of them. We understand these are the most important levels based off of options positioning, but there's a lot of levels here. How do we think about them? What are the most important ones? Obviously NQ ran right into the put wall, found nice support this morning, right at the put wall. Is that what we should be expecting of the move into the put wall?
Yeah, 100%. So we have the named levels. We name them because they help us to easily describe the way a position sets up. So a put wall is where the biggest put positions exist from a gamma perspective. And that's generally support. And in fact, if you look at the stats, we find that the forward returns in equities after we test a put wall are actually positive. So the market tends to interact as that is a low, right? And we tend to bounce off of that level. Conversely, as I just mentioned, we have this idea of the call wall, which we hit yesterday. And the call wall is generally a major resistance point because that is where the biggest call positions are. And so those two are kind of what we like to refer to as our macro range, so to speak. So you can think about it, if you zoom out a little bit, what's my tradable range? If I was swing trading, I'd be like buying the put wall and selling the call wall. Now these positions shift every day based on how the options market's moving around. And as Jason mentioned, there's a couple other things on your screen there. You can see L1, L2, or C1, C2. Those are those large gamma strikes and combo strikes that we mentioned before. We know that there are very large positions in the options market sitting at those levels. And we filter these levels out. So we don't just tell you where everything is. We only tell you what we think is most important. Now, you did mention there's a bunch of levels sitting there today, Jason. And what happens is at options expiration, as I mentioned, the positions concentrate. So we're getting a lot more levels tightly packed in an options expiration like today, which is an important signal, right? Because what happens sometimes, like after expiration, the levels will all spread out, right? Because the options positions have decreased a lot and spread out. So there's a sign in the fact that you see so many levels actually fairly concentrated. And again, these are all support and resistance levels as we move through the day. The other thing that you're going to notice on your screen, there's something called the vol trigger and zero gamma. And essentially what these concepts are is they tell you when the market is kind of well supported. If you've ever heard of the idea of positive or negative gamma and how that keeps market volatility low, that plays into this idea where over the vol trigger and over the zero gamma line, dealer hedging flow should be kind of supportive of the market and keep us in a relatively safe position. Under the vol trigger or under the zero gamma level, we would expect volatility on net to increase. So what does that mean? That means if we break below these levels, you should expect the market to start to move a lot more. And so you can learn a lot from watching these levels and start to understand, okay, there's a lot of support and resistance levels here, but we're below the vol trigger, right? That means that we could have an outsized move lower in that situation. Okay, look, we're at the put wall. We should expect a little bit of a bounce and some support here. So that's those named levels help you to kind of describe dealer positioning. And as you get a little more used to looking at these every day, you can start to learn, oh, okay, here's how the levels interact. I see the vol trigger lines up with, the 1-day move, and so that should be a support level, for example. And then the last thing is that estimated 1-day move. That estimated 1-day move is struck at the market open every day. And again, you look up and down and based on what our model says. So today our model says 54 bips. So what does that mean? From the market open to the close, we should only move 54 bips in the S&P 500. Now, what our stats show is that 78% of the time we close within our estimated 1-day move. So what does that mean? That means if we trade lower to say that 19,850 area for the NASDAQ or up to that 2250 area, we would expect the market to find support there. So even if that's breached, we would still expect the market to kind of rally into the end of the day and close within that 1-day move. And the reason we think this 1-day move is so impactful is because we're all aware of the proliferation of zero DTE options trading, right? And I believe that zero DTE options trading brings mean reversion to the market. What does that mean? That means is a bunch of people bought zero DTE puts today as an example, and that started to move the market down. They're going to close those puts by the end of the day, and that allows the market to rally back up. So that's the mean reversion aspect that I'm talking about. So anyways, that's a mouthful. There's a lot to talk about, but these levels, and this is all very carefully documented. We've produced with TrendSpider a lot of videos and other ways so that you're not getting, again, tossed in the deep end of the pool with all of this. You are going to be kind of handheld through what all these levels mean. And the other thing that I want to mention, and Jason, you mentioned this before, and I've seen it happen a bunch of times. All of you on this call, you guys all know what you're doing, guys and gals. You all know what you're doing. If you're here, you've been trading for a while, likely. You have a model of the market, right? You like to use technical analysis, or maybe you like to use Fibonacci's or moving average crosses, or whatever it is that you may use, volume profiles, right? Jason said this to me yesterday as he's really been digging into the levels. He said the most powerful things are when I find that whatever my discipline is, and Jason, you have to remind me if it was, I think it was volume profile or use a mix. When something lines up with your own analysis and it lines up with these SpotGamma levels, you find that to be extremely powerful. And I've heard that time and time again. And the reason I bring that up is I'm not here to give you a new trading strategy. I'm here to say this is how the options market can overlay on top of your trading strategy to make it even more powerful. And so again, I've seen that this multidisciplinary approach, time and time again, where, hey, I'm not offering you a new trading strategy. I'm just offering you a supplement to what it is you're already doing.
Yeah, definitely. I mean, it's really been amazing how powerful these levels have been when used in tandem with what I'm already identifying without them. It's been kind of a game changer. I have to say, I was pretty immediately converted to, oh yeah, I got to use this every day. I have to know where these levels are every day.
Yeah, and Jason, if you don't mind, can you bring up the S&P from yesterday? I just want to show a really great example. And Jason and I, was funny, we were talking before, and we're like, hey, we need to have examples ready, and we said, well, let's just wait, right? Because yesterday probably is going to give us a great example of how things work. And sure enough, the futures were very strong at yesterday's market open, and they were actually showing well above this call wall. And what we said in our founders note, and what you'd expect, is that the market should come down under that, because these calls being tested, this call wall being tested, should be a space where dealers and market makers have to sell shares of stock or sell futures. So you can see we rejected that call wall, and then the market found a bottom. The spiders found a bottom at 54.50. They touched a hair over that. And what's so important about 545 in the spiders is there's a huge amount of gamma at that strike. It's a level we highlighted in our founders note, so everyone knew it was there. The other thing that's interesting about that level is it was the bottom of our 1-day range. So you had this lineup of our big support level at 545 spiders, as well as that being the lower end of our 1-day move. And sure enough, there was a great bounce yesterday in spiders. I know a lot of people on the SpotGamma Discord and was able to catch that. Jason said he made himself fabulously wealthy, I think was the term he said. I'm just kidding. But I know Jason traded that one as well. So, these are not, we don't have to search back weeks in time to find great examples of these levels working out. Yesterday was a prime example. Today, obviously, you see the put wall offering great support as well. And then these levels fall within the context of, hey, we have options expiration today. It's very call heavy, so there should be a little bit of a downward bias. We called it the window of weakness entering in yesterday to today and early next week. Usually by Monday, Tuesday, those hedging flows are kind of washed out. We can kind of settle in. And on that note, I just want to give a couple of forward-looking estimates here for those of you who are either not live or want to watch this video again. 5,400 is a very big support level in the S&P 500. I think if we catch that and stabilize there, we will recover very quickly. And the levels that everyone needs to watch for the upside into month end is 55.50 in the S&P SPX, because there's this kind of famous trade called the JP Morgan collar trade, and that rolls at the end of every quarter. So that rolls on the 28th, and they have their call position up there at 55.70 in the SPX index. So you can kind of jot those levels down, 5,400 support, and then that would be a tremendous rally to close all the way up there. But we've seen crazier things happen.
Interesting. Well, do we want to take a minute and show everybody kind of like what the functionality looks like, how to bring the levels over, what they can do with the levels specifically in TrendSpider?
Yeah, I think that sounds great. People show them how to flex the amazing charting package. Absolutely.
Flex the muscle. Yeah. So first off, when you sign up for this bundle, or if you're already a TrendSpider trader and you want to get access to a SpotGamma account, we are offering deals for everybody. So, if you don't yet have a TrendSpider account or a SpotGamma account, you can take advantage of this bundle deal. The guys in chat are going to hook you up with this link here, $992 for a year of both products. Insane deal. But if you are already a TrendSpider trader, the guys at SpotGamma are offering, I believe it's about 40% off any of their yearly plans. We're offering up to 50% off our yearly plans if you're a SpotGamma trader. So if you're not familiar with SpotGamma at all, how to bring the levels over, it's super, super easy. You just come over to your SpotGamma account here. You grab this button, push the copy all button. That's going to copy the levels for today. And then you just jump back into TrendSpider. In your indicators, you can search SpotGamma. This indicator is going to be available as a downloadable indicator in our trading tools store. Once it's downloaded into your account, it's there. And then it will appear right here once you've added it to your indicator list, and you just select the old days levels, right click, copy pasta, the new days levels, say apply, and then they get applied. And obviously mine didn't change because I had already applied them for the day, but every single day, this is what you do. It takes about 2 seconds to grab the levels, copy paste them over into the indicator. And Brent, real quick, what time do you guys update those levels every morning? I know it's well before market open. So, for those who trade pre-market or whatever.
Yeah. So 2 a.m. to 3 a.m. is when you'll see the models push out. And the reason for that is because open interest updates once per day by the exchanges at around midnight. And so we start to run our models. And so generally speaking, by 2 or 3 p.m., we have, 2 or 3 a.m. Eastern time, we have those levels kicked out. And I would just note that we have a tremendous number of international traders that use our levels in the overnight session to trade the ES and NQ. So I know there's a bunch of international folks on here or non-US folks on here. And I could say that from my experience, just with our user base, they find that the levels work very well in the overnight.
Okay, so essentially you're just carrying over the levels from the previous session into the overnight session, and then at 2, 3 a.m. they get updated?
That's exactly right. Yep.
Got it. Okay, cool. So once you've got the levels plugged in on TrendSpider, there's a couple of things that you can do with them. Here at TrendSpider, we're very, it's our goal to make everything as kind of effortless as we can for you as a trader. We want to make things that are meaningful and powerful and helpful. So one of the things that you can do here that's unique to TrendSpider, you can right click on any SpotGamma level to create an alert on it. If you're already familiar with TrendSpider, you already know how these dynamic alerts work, but you can choose your trigger, whether you want a breakthrough, a touch, a bounce. You can be triggered on all 3 or just 2 or just 1, but choose your trigger. choose the time frame for the confirmation, like what time frame do you want to receive that alert on, and then set your expiration time. This is the one little piece of this for anybody who is familiar with TrendSpider alerts. This is the one piece that you should probably be really mindful of is the expiration. These levels change every day. So in theory, and Brent, I would like to talk to you a bit more about this coming up, but in theory, every single day, you're going to want to, if you want to create alerts on these levels, you're going to want to create an alert that only lives for the period of time where that level is important, which is today, right? It's this session. So I always will set my expiration for the 12 hours past. That way, once it's a new day, this alert is no longer active. If you do happen to set an alert for a couple days out, you might get an alert on a SpotGamma level that maybe isn't relevant anymore. So I have been just kind of telling people, use the 12 hours past. That gets you through the end of the day. And then when tomorrow comes, you want to create a new alert on a new level. You can do that. Create alert, and then you're off to the races. So the platform will automatically monitor the NQ chart for me here at the 0 gamma level and let me know if price happens to break through it. And I could do this for any level that I want. On as many of these tickers as I want. You may have key spots that you're looking for. Maybe we saw this large one level act as like perfect support this morning on ES. Maybe we want to be notified if price breaks down below it. We can right click on it, create an alert, look for a breakthrough, and that fast, we've got an alert to let us know. We don't have to monitor if we're not trading ES right now, but we want to know if price breaks down below that low. We want to know that that happens. This is the quickest and most efficient way to do it. The other way that we have implemented SpotGamma levels into the platform is via the market scanner. So inside the market scanner, for anybody who is not super familiar with the TrendSpider market scanner, it is a point and click creation tool. You don't have to know any code to write scripts for the scanner. You just got to know what it is you want to define. So if you come in here and you say condition and you go to indicator, select your time frame there for the indicator, and you type in SpotGamma, you are going to see every single SpotGamma level that they offer is definable within the scanner. So what does this mean? Well, what it means is you can define conditions related to whatever SpotGamma levels are of most important to you. So let's say, for example, you want to look for any names of the SpotGamma, of the tickers that we currently offer SpotGamma levels on. That's the index ETFs and the futures symbols. So that's NQ, ES, RTY, SPY, QQQ, IWM, and SPX. For any of those symbols, maybe you want to know prices within a certain percentage of the one-day estimated move, either the upper level or the lower level. You can come in here and you can define that prices touched it, right? Or prices within range of it. I can kind of script this a separate way and say price close is within range of this indicator, SpotGamma one day estimated down. I'm going to just remove this one. I could also say that price is within range of the estimated up, right? I can change this to any of the following. I can define the percentage with which price, or that which price is within range of, right? By default, it's 1% here. I could make it 0.5%, 0.25%, whatever you want to define. It's up to you. And then in your scan through list here, we've got a shared watch list specifically for SpotGamma levels. The guys in chat, for anybody who's a TrendSpider trader that wants this watch list, the guys in chat have a link so that you can upload it into your account. But this will scan all of the names over here, the NQ, the ES, the RTY, SPY, QQQ, IWM. It'll scan all 6 of those names for these conditions occurring right now. So let's see. I don't know if we're going to have anything within the one-day range. Cool. So everything is probably within that lower, I would guess, within 1% of that lower range. And we could tighten this up if we wanted to, but that's really kind of where the functionality is different from what you're used to with TradingView. I know you guys, Brent, you guys have integrated with quite a few different platforms. We're not the first to offer this integration, but I do believe we are the first to, and now I'm getting an alert on that SpotGamma, that level, breakout or breakthrough of that level. So that's a little bit of the functionality piece of how you can utilize SpotGamma levels in TrendSpider a little bit differently than how you can utilize them in other platforms. Just making it just a little bit easier for you to identify what you might be after, if there's something specific that you might be after.
Yeah, and to the point too, with the alerts, I know you can add that kind of multidisciplinary alert as well, right? So you can have the conditions where you say, I'd like to see, moving average cross and the spot gamma level.
Yeah, you could. There's inside of the multi-factor alerts, we would do that. So you would have to just define, prices within range, something like
Yeah, that's pretty
this.
cool.
And then like if you wanted a moving average cross, we'll just use these EMAs that I got crossing up on 21 EMA. So this is prices within range of the 1-day estimated down move by 1%, and you've got a cross up on the 821 EMA. And the same thing is true for the scanner, right? Like you were talking about people kind of using this as a overlay, right? On top of your current style of trading, whatever that is. Maybe you trade moving average crosses. Maybe you trade reversion trades when RSI is oversold or overbought, or a price is extended above or below a VWAP, or whatever it is that you do. Define it inside of the scanner with the SpotGamma level criteria that you need and find it in real time. So super, super powerful. If if you're not like me and you're not at your computer 8 hours a day staring at the charts, staring at the 1-minute charts, super, super powerful. So that's a bit about the functionality. We've learned about kind of what the levels are. Brent, I have a decent handful of questions for you that I'm kind of curious about. And then I want to kind of pass the mic over to the audience to answer some of their questions. I know we have a couple already being asked right now. But a first question that I have for you is, I log in to TrendSpider. It's 30 minutes before the bell. I grab my levels from SpotGamma. I throw them in to TrendSpider, and I'm popping through these charts. What should my like mental process be? Are there things that should immediately catch my attention? The price is really, really close to the 1-day estimated move to the downside right now, or price is really, really close to a big combo level, or, are there things that are immediate like flags for you when you're just starting your analysis at the beginning of the day?
Yeah, there are certain levels that are important every day. So, a position will build like 5,500, for example. And that position will build up over the days and weeks. And so a big thing with our platform is people watch how the levels change from day to day. Like, did the call wall roll to a higher strike? If it did, then it suggested the market's probably going to move up. Did the put wall move up or down? So the shift of levels is important. It tells you how options traders are adjusting their positions. Generally speaking, higher levels, like if all of our levels start to roll to higher strikes or higher prices, that is implying that it's a bullish scenario. And obviously lower levels are, when our levels are reflecting lower, suggests that there's a negative bias in the market. So that's one. And then the second one is, I find that when I use that 1-day implied move and I say, okay, yeah, we're before the market's going to open, but I can basically tell where the S&P should open. Let's say it's going to open around 5450 today. And so if I look up or down from our implied move, 50 basis points or whatever it may be, 0.5%, I love to see where the big spot gamma levels are at that area are. Like yesterday, the market, if you look down by our implied move, you saw that huge SPY 454 level. And so your kind of like trading plan for the day is like, look, if I get that opportunity, right, to buy that dip, I guess circle that level, because we have this 1-day move. So there's this volatility component where dealers should start to hedge. And that lines up with this big gamma area where there should just be a lot of hedging flows unlocked at that level. Right. So, those are when you're trying to set up your price targets or key zones of support and resistance, I find use that 1-day move and line it up with where the big support levels are. Based on our metrics, I find that to be very powerful.
Gotcha. Are you using one of the questions that came in here from Shyam? He asked, or she, if you're she, I'm using different time frames in some of the examples. Do you have a particular time frame that you feel like it's best on? I mean, the levels stay where they are all day, so to me it's kind of like it's whatever time frame makes sense for you and your style of trading, but do you have a preference?
I don't. I think it's interesting to me because the options hedging flow is a 24/7 thing, right? Like if you have big options positions on, you'll find that if a big move happens overnight, well, there's a London desk for whatever U.S. market maker there is, or an Asian desk, right, that is hedging in the overnight. So, we find that the levels work again 24/7, but I find generally with the cash market open, things are a little bit stronger because you also have the single stock flow of stuff that's moving around. But we have traders that will sell, zero DT option spreads, so they have very short-term time frames. We have swing traders that will sometimes hold multi-day, right? Because they know like the call wall rejected yesterday, which generally implies that the market should be weaker over the next couple of days. So
Right.
what I say is, do what's comfortable for you. Some people don't want to trade zero DTE and jump in and out. Like you said, a lot of people don't like sitting in front of the screen 8 hours a day. So you don't have a choice but to be a little bit of a longer term trader, right? So what I would say is, these levels are honestly most powerful from an intraday basis to a few days out in time. 4 or 5 days, something like that. I think when you get farther than that, the problem is that the options flow shift so much that a lot of time, it's a little harder to track. The exception would be oftentimes we see that major lows in the market. Like if you think about, the market crashing, like in April, for example, we were down 5% for the month of April. The exact low was on options expiration day, right? That was the low of the market. And we see that happen time and time again. So, from that perspective, you can zoom out a little bit maybe and allocate, around that. But for the most part, it's kind of intraday to 4 or 5 days out in time is the time frame.
Gotcha. So levels from previous days can definitely be important in future days.
Yeah, and how those right you'll see when you start to watch, you'll see there's a cadence to stuff, and we talk about all this in our founders note, so we don't just let you sit there and try to run all this analysis yourself. Like the founders note that you get with the subscription and the bundle, I lay it all out for you. I say, look, here's how the position shifted and rolled. Here's what this means, and here's the data to sort of substantiate that. Like I said, there are plenty of people who actually. I probably shouldn't say this, but they don't read the founders note. They just take the levels because once they kind of get the cadence of it, they just said, "Show me the levels," and then I can like do what I got to do.
Right.
Which hey, more power to you if that's what you're comfortable with. So the way that those levels shift and change, like I said, that does inform us of how the options market is treating things. And if you just think about it for an example. If people are bullish, right, and the market's moving up and calls are continuously sold at higher strikes or trading at higher strikes, that's telling us that there's a sentiment perspective, right? That these positions are building up overhead. People think that the market could move up or roll up. And then it also tells us from a hedging flow perspective, the center of where hedging flows are taking place is continuously moving up in the market. So, there are these, again, sentiment kind of reasons for things happening, but then there's also these, what we call positional reasons. Positional is a term we coined for you have fundamental analysis, which everyone knows, and technical analysis everyone knows, and we do what's called positional analysis, which is like we know or we believe we know how dealers and market makers are positioned, and here's how they have to trade as a result. Kind of like in margin call, right? If you know that hey, this guy's short a bunch of GameStop shares and we're going to try to squeeze them, right? That's a positional kind of analysis.
Right. Do you have specific, this kind of like moving off the topic a little bit, but do you have specific setups that you're looking for that you just find to be super money in your own personal trading using these levels?
Yeah, the call wall is a big one, particularly in an options expiration like this. Selling call spreads at that level is proved. I'm a little bit more of an options trader, so that tends to be the lens that I look through the market. So, like for example, that there's these OPEX positions that should be adjusted, and so there was this massive high. The market had an unbelievable streak of wins coming into today. We know that it was super stretched. Like I mentioned, call positions are 9-1 in terms of put positions, and so you can see all of that come together. This overbought condition We hit the call wall in there. We know all these positions are set to expire. So, this type of time frame when we're moving into a very big options expiration informs me that, hey, if this the biggest options expiration ever, then the options flow should have a big impact on the market, and I can feel better about the size and strength of the levels that we're trading, right? So those are the setups I often like to have, but on an intraday basis, as I mentioned before, anytime one of our big levels lines up with that implied 1-day move, that's where I find the sweet spot. Buying that dip at the bottom of a 1-day range at a big spot gamma level, like yesterday's SPY 454, or selling the high, when it lines up with the top of a range. So like today, the top of the range would be 5,500, right?
Right.
That on an intraday basis to me is the strongest. And sometimes it can be frustrating because we're usually in the zone of testing those levels. Sometimes it's just very boring and we're not testing that. And so it's hard to kind of sit on your hands and wait that out. But I generally find personally, selling put spreads, for example, when we test that bottom, or buying 0 DT calls is something I like to do when we test the bottom of that range. Obviously, we have a ton of futures traders that like to get long just futures or spiders at those levels as well. So that's where I find, generally speaking, are the strongest setups on an intraday basis.
Gotcha. How do you think about this? Is something that I've observed over the past month. How do you think about when you have reversals in where the put wall and the call wall are? Every once in a while, most of the time, the call wall is above the put wall, but I feel like I've seen it on certain sessions where that's in reverse. The put wall is above the call wall. Do you think how do you think about that is the first question, but then kind of a secondary question is this is the basic example: call wall above, put wall below, price found support at the put wall, and maybe you're hoping to trade it up to the call wall or up to the 1-day estimated move, and maybe it finds some resistance there. But what happens if price is above both of them or below both of them? Do they act as the opposite of what you would anticipate them to act as if price were above?
Yeah, so that's a very interesting thing you mentioned there. Lori just asked quickly about Mag 7 names. I don't mean to interrupt the conversation, but 130 in NVIDIA is the kind of big gamma strike for today. So 130 to 135 are the two big strikes. Anyways, sorry for that. So in terms of the way the levels interact, what's interesting is if you look at the size of positions in the spiders, SPY, the SPX, in the QQQs, the positions are very consistent. And what do I mean by that? The call wall is almost always above the put wall. I can't, 99% of the time, right? Because those positions are very big and consistent. What I mean by consistent is every day, the market opens and a bunch of calls are sold and a bunch of puts are bought, or vice versa, whatever it may be. And you can set your watch to the cadence of those positions setting up. In the NDX, what you tend to see is it's much more of an institutional product. And so you have much more scattered open interest. What do I mean by that? I mean that you can sometimes have a put wall above a call wall because all of a sudden one big player will come in and put on a big NDX position, and that shifts the way that the level's set up. And so it makes a little bit of a noise in the NDX complex specifically, that the call walls and put walls will reverse and the levels won't make quite as much sense. And for this reason, and to this point, and this is why the combo levels are such a big deal, because if you're trading NQs, you want to go off of the QQQ levels, the key levels, right? That's where the most of the gamma is and most of the deltas and things that we track and most of the open interest. But you'll have that one-off really big NDX level, and you need to know where that exists, right? And so that's why these combo levels are very helpful, and that helps you to kind of clear everything up. So again, usually the levels line up, meaning call wall is above the put wall and the vol trigger is right in the middle. On the NDX side, things can get a little bit of noisy just because the open interest is chunky and can do some strange things due to the fact that the open interest isn't as large as it is in the Qs.
Gotcha. Okay, interesting. Another question that I was kind of curious about is, how do you think about the difference between the levels on, let's say, the futures symbols versus the levels on the index ETFs? If I'm trading SPY, I should be looking at the SPY levels. If I'm trading ES, I should be looking at the ES levels. Should I be looking at SPY levels if I'm trading ES? Should I be looking at ES if I'm trading SPY? How do you think about that?
Yeah, you have to look at everything. So if you just trade futures, you still have to know where the spider levels are. To that point yesterday about SPY 454 or 545, right? And because you think about the S&P 500, it's all tied to the S&P 500 index, right? So the ES futures are tied to the S&P 500, the SPX index contracts are tied to the S&P 500, and so are the spiders. And so if you get a whale coming in on spiders that moves the spiders around, guess what? Because of the arbitrage trades, right? That the SPX index and the futures are going to stay in line with that SPY whale, right? So
Sure.
you have to know about the entire complex. You really do have to watch everything, which is why we offer those combo levels, because that is telling you, okay, based on the entire Nasdaq complex or the entire Spider complex or S&P complex rather, these are the levels that you got to watch.
So would you say then that kind of the combo levels are maybe a little bit more powerful, a little bit more meaningful than the large levels?
Yeah, I would say, particularly in the Nasdaq, because the Qs are so much bigger than the NDX index positions. That to your point, that the combo levels are generally the ones that have the most size associated with them.
Gotcha. Okay. Um, an anonymous person has asked if you guys have thought about a version of the indicator where you could include prior day's levels so that you could kind of see how the level shifted day to day.
It's a great question. We've not built that out. It's a fair amount of engineering work, I would say.
Right.
But I would say that at spotgamma.com, we have a historical levels download, and that has, I believe it's 4 years of our back levels in there. So, we're open book. You can download a spreadsheet that's got all those levels. People love to run all sorts of fascinating, different regressions and tests. And, if you like moving average trades, then see how those line up with the historical moving average trades, right? So, you can go ahead and run that through Excel or whatever it is you like to do.
You could run it through TrendSpider, actually. You could create a custom
Oh, I
chart.
didn't know that actually.
You could create a custom chart. I didn't realize that you guys had all that historical data. I feel like my colleague James's ears are probably perking up right now in the chat because he was talking about doing exactly this, like that, like a continuous version of the levels, so you could see them, over the long term and see kind of like how price interacted.
Yeah. So there you go. You can just do it on TrendSpider yourself. To get. I know people like to drop into the Chat GTP now and ask questions. That's the one I was going to say. But even better if the platform just does it for you.
Yeah, for sure. Let's see. I mean, I feel like I've kind of gotten through most of my questions. You kind of answered one question that I had was like when multiple levels are in close proximity to one another, presumably that creates a scenario where that area is a little bit more important, right?
Yep.
Yeah.
Yeah.
Um,
And I just see there's Stephanie's asking a couple questions about support. So we have on Mondays at 1 p.m. and on Thursdays at 1 p.m. Me personally, I do a Q&A. And so you come in, you ask whatever question you have. If you want to raise your hand and speak to me, you can. But I'll walk you through whatever the issues on the Spot Gamma side for support. And then we have what's called office hours with my friend Imran. That's on Monday mornings and Wednesday mornings. So that's how we generally offer support. You also fire in questions to our support team, or if you're on Discord, come and ask questions of us. We have a couple of different people in Discord that are tremendously helpful. So there's a ton of support there, Stephanie, from the Spot Gamma side, and I know that TrendSpider offers an amazing support team as well. So I don't know, Jason, if you want to speak to that quickly, but I know she's asked a couple of questions about this.
Yeah, I mean, for our support team, it's really an undersold piece of the platform, but those guys are live Monday through Sunday, every single day of the week. We've got somebody live in chat answering questions during the week, Monday through Friday. It's like 20-ish hours a day. And then on the weekends, I believe it's about 8 hours a day. So there's almost always someone around who can answer a question for you. And it's not limited to questions like, how do I log in or how do I do that? Like, we understand our platform is dense. There's a lot to learn. There's a lot of tools to utilize. And you can come with any question that you want and it will get answered. If you have a trade strategy that you're trying to learn how to script for to build out a strategy test, come in and ask. Let the guys know kind of what you're trying to build. They can help you with learning how to script. We have tons of educational materials online between videos and all those sorts of things that you can reference if you just need instant answers. But those guys are there to, white glove service, give you a helping hand with whatever you need help with. So definitely utilize them. Down here in the bottom right-hand corner of your TrendSpider account, this contact us button, that's a direct feed into our employee chat room. So you can access them. We've got a Discord channel where, other TrendSpider traders are hanging out, sharing ideas back and forth. I know you guys have a Discord channel as well, right?
Yep, absolutely. And so if you don't want to get in Discord, it's no problem at all. We also have just the good old email support. So Stephanie, we don't. She's asking about paid human support. We don't offer paid support, but I'm very confident we can get you up to speed and get you going. And obviously, from our perspective, if you're paying for a subscription, we want to get you up to speed on how to use the thing. So I don't want to charge you extra for that.
Yeah, right on. Well, Brent, unless you've got anything else to share, I'm really kind of spent on questions here. This has been awesome. I want to give everybody who's in chat big shout out. Thank you guys so much for being here. If you have any last minute questions for myself or Brent, please do hit us. Dan, there will be a recording available. Yep, it's going to take probably a couple hours for the video to kind of suss itself out, but we'll get it up on YouTube before the market closes today. I'm certain of that.
Awesome. And I put in the chat, we put our founder's note out this morning for free. Every once in a while we do that just to offer people. So if someone want to get a look at the founder's note, read a little more detail, there's a link to the free version there. And obviously with the bundle pricing coming up, it's an incredible deal. And so we hope to be seeing all of you bright and early next week after you sign up for the bundle.
Yeah, I'm just gonna show this really, really quick. Just the last little push here. $992 for a full year of TrendSpider Enhanced and a year of SpotGamma Standard. Excuse me. To learn more about either of those offerings, you can just click on the links down here below. But these are kind of the basics of what you're gonna get. And then again, like we said, if you're a TrendSpider trader interested in a SpotGamma account and utilizing these awesome levels, they are hooking you guys up with 40% off any of their yearly plans. If you're a SpotGamma trader, you're interested in giving TrendSpider a go, we're hooking you guys with hooking you guys up with up to 50% off on our yearly plans. We've got 50% off our highest tier and then 41% off our middle tier. So trying to take care of everybody here. And it's a crazy deal. I mean, truly, I am shocked at how powerful these levels are. Truly, Brent, you and I have been talking for a long time on spaces and various things, and I've always known about SpotGamma, but now getting it in TrendSpider, getting to interact with it every day, it's just like I don't know how I was trading. Honestly, I don't know how I was trading without it. It's that helpful for me on days like you said, some days you do, it's best to sit on your hands because price just isn't really interacting with anything of any importance. And then other days you get these great tests of the 1 day move, like you saw yesterday on the lows on ES. Like it was perfect and it lined right up with a level I was already watching. I mean, made my week, right? Like one trade to end them all. And that's what it's kind of all about. Like they're just so helpful, man. I really appreciate all of the work that you guys do to share this information with us, and really, really honored and excited that you guys were willing to come be a part of our thing and integrate with TrendSpider. It's just such a powerful tool to have.
Yeah, well, thank you so much. Very flattering on those comments, and I could say we had a long list of people who were looking for this integration. Before you guys mentioned, hey, let's do it. So there was a lot of demand, which says that clearly people are looking for the combination, and so that speaks to the strength of your platform because there's a couple of other charting platforms out there, but people are just diehard TrendSpider fans. So give the people what they want, right?
Definitely, definitely. We had a couple questions, one for me, one for you. Discounted price for top TrendSpider plan. It's 51% off. I don't have the exact number for you, but one of my colleagues can get you that here in the chat. And then there was one for you, Brent.
Um,
How soon may SpotGamma Standard be upgraded to annual discount ticker enabled package? Awaiting. I guess they reached out to your support.
okay.
We'll
Yeah.
let support answer it.
Yeah, support will be on that one. Info@spotgamma.com is our support email. So if you have any extra questions around pricing or whatever it is, just shoot us an email and we'll be making sure that we respond to you quickly on that, because I know there's a lot of buzz and a lot of stuff happening around. Doug F asks about our volatility dashboard. We allow you to look at the options market using a bunch of proprietary volatility tools. And so if you are a person who likes to trade in the options space, I think honestly, even if you don't trade in options, watching volatility can add so much value to you as a futures or trader. But these tools, honestly, we built these to compete with Bloomberg. For those of you who know what the Bloomberg system is, and we give you a full breakdown of a whole bunch of ways to look at implied volatility in options. Which again, there's so much information embedded in there. I include a lot of these screenshots in our founders notes and talk about volatility all the time and how it impacts trading prices. So even if you don't want a more advanced package from SpotGamma, you get volatility analysis from me in our morning notes. So you'll start to get a flavor for that as you get your feet wet. And then we have a bunch of other advanced tools as far as monitoring how options are impacting the market, something called Hero. There's single stock levels and things like that in there as well. So, there's a whole other set of paths that we can go down as well in different SpotGamma memberships.
Yeah, and also, not to let the cat out of the bag too much, but this is just the beginning of the integration with you guys. We wanted to see how this would work. Will people be interested in these index levels? And you guys provide levels for a lot more than just the indexes. You guys provide levels on a single stock basis too.
We do. We have something called the Equity Hub, where there are key levels for every stock in existence. The interesting thing is certain names like Nvidia, Apple have huge amounts of options volumes. Our levels are great, and so we try to weigh this out for you. Say, hey, these are the names where options matter. Pay attention to these. It's like we mentioned Nvidia before. A huge amount of gamma at 130 for today. Then there's a big level down at 120. So if you happen to check my Twitter, I say, hey, I think we're going to end up tagging this 120 area at some point early next week. But those levels are available. And to your point, we do want to expand our integration so people can get at these key levels in the TrendSpider platform. Behind the scenes, we're also rolling out a couple of new models. Those are being beta tested right now. So, I know you guys don't sort of give it a rest, and we don't either. It's constantly innovating and expanding and improving the offer. And so, we're excited. This is, again, just step one, and a lot more integrations to come.
We have a question asking when you guys will allow simple click and paste levels for all stocks that you track.
Yeah, so I think, since we already have the basics up here, to start to offer, hey, here are the Apple, Nvidia, Tesla levels, or a handful of specific stocks, I think that integration will be pretty easy to do. So, we're looking forward to getting a bunch. I mean, we just launched this integration, so as we get people using this integration between us and TrendSpider, our bread and butter is the S&P 500. It's where SpotGamma really started to get all of his attention. But some of these other stocks, single stocks, are really becoming pretty incredible. It's incredible how the options are driving them. And so I do understand there's a lot of demand just to get those point and click paste or copy paste levels for those top stocks. So I imagine we're going to be. Clearly, there's a trend here of people asking for that. So I think we're going to be talking a lot, Jason, in the coming days about expanding the offering.
Great. I can't wait. That'll be awesome.
Yeah. And on that point, if you are an Equity Hub subscriber at SpotGamma, I believe we just enabled a download link. So you should be able to. The reason I'm pausing is because I have a beta system, and so sometimes stuff is happening in beta. I go, "Oh yeah, you guys can do this now," and then and then it's like, "Oh nope, not yet." Yeah, there's an export button, so you can download our levels in an Excel sheet now, which I imagine you could probably pull into TrendSpider.
Yeah, you could. You could. That's interesting. Yeah, you could, because you could create a alternative data chart, and then you could load it up as a alternative ticker and overlay it. Yeah, you could do that. We'll have to build some examples and maybe even like a little video about how that would work.
Yeah. So anyways, that doesn't seem like a heavy lift. I hear y'all that you like those stock levels, and we'd like to give them to you. So we'll start thinking about that in the days to come.
Right on, Brent. Well, I don't want to take up any more of your time. We've been here for an hour. I feel like we've got a lot of the questions answered. Again, we're so thrilled to be able to work with you guys. And last call here. This is going to be live for the rest of the weekend. So, hopefully you've seen what you've seen today. It's piqued your interest enough to give both of the platforms a try. And if you're already a member of one of the platforms, definitely sign up for the other one using the deal that is available this weekend. I want to give a big shout out to Brent for joining us, man. Really, really appreciate it.
Thank you.
And a big shout out to everybody who tuned in today. A ton of you guys came out this morning, so we really appreciate it. For everybody who's asking, we will post a link to this video on YouTube. It will be available probably by end of day today, sometime before market close. I'll get it up as soon as I can get it, as soon as Zoom does the thing that they need to do to turn it into a video. It usually takes a couple of hours,
It does.
But we'll get it up and posted for you guys. So have a great rest of your trading day, y'all. Have a great weekend. Again, thank you so much, Brent, for joining us, and thanks to SpotGamma for this awesome integration. We're really excited about it.
Thank you guys as well, and thanks everyone for joining. We'll be seeing you all soon.
All right, y'all. Take care. Have a great rest of your day.